Hey traders, it's John Fortune here with this week's weekly Forex Forecast. I hope you're all having a fantastic weekend. In today's video, we're going to start off by having a quick review of the key events for next week, and we do have a big event in FOMC, so it's definitely something we need to take a look at. We're then going to move on to the scorecards for the currencies coming into this week. And once again, last week, those scores put us in front of some of the best moves like Euro New Zealand to the downside, EurOsd to the downside. Once that's complete, we're going to move on to the individual currency analysis. We're going to look at the futures markets for the individual currencies. And then we're going to move on to the currency pairs matching up the strongest and the weakest currencies and highlighting what markets are most likely, in all probability, going to be the best plays next week. And as usual, we're going to wrap up the video by looking at stocks, gold, silver, and Bitcoin. And the process, the data, and the analysis that I use on the stock market is suggesting we could be at a near-term top in stock. So something to pay attention to we'll go through at the end of the video. So first things first, let's go and have a look at the key events coming up for next week. And there are a number of events coming out next week. There's quite a bit going on, which is likely to shape the markets next week. So we do need to pay attention to this week. The first thing is there are some important pieces of data like ISM manufacturing, but this is more for building out your macro analysis and the fundamental side of trading. Whereas for the short-term trading, how the markets are likely to move, the main thing we're looking at here is the interest rate decision on Tuesday as the first thing. And following on from that on Wednesday, the big one is FOMC out of the US. And that is likely to shape not just the dollar pairs, but a lot of the markets, possibly all of the markets that we're going to be looking at going into next week as well. So Wednesday really is the big event. This is what you need to pay attention to coming out next week. But going back to and starting with the Australian dollar, on Tuesday, we have this RBA rate statement. And what this means is that the Aussie pairs are most likely going to just correct or move sideways and do nothing on Monday. And then going to start to see the markets moving from Tuesday onwards. So in terms of the Aussie pairs, what I would like to see is, as always, a move in the direction of the markets that we're looking at. And any move in that direction, you start to get a pullback. That's your opportunity to look for entries and positions in the direction of that move for follow-through plays. That's how interest rate decisions are traded with minimum amount of risk. You can, of course, get involved in interest rate decisions before they move, but of course, if you get on the wrong side of it, it's going to get volatile and you're likely to be stopped out. So if you're managing your risk, that's fine, but the safest way to play these are looking for those follow-through moves. So personally, I'm not going to be interested in the Aussie pairs until Tuesday onwards. We also have employment data coming out of New Zealand on Tuesday. This can also act as a catalyst. So again, look for the employment data to produce moves in the direction that we're looking for in the markets, and you can trade any pullbacks, any bull flags, for example. Look for the follow-through. And although the employment data doesn't have as much of an impact as the interest rate decisions, I wouldn't be too surprised to see the New Zealand pairs drifting into Tuesday and perhaps starting to move from the employment data onwards next week. If we scroll down on Wednesday, as I said, the FOMC, the meeting, the press conference on Wednesday is likely to cap any moves in the dollar before this takes place. And this is also why we saw the dollar really failing to break any lower and in the end kind of just drifting sideways, being a little bit choppy last week because of this interest rate decision coming up this week. So in terms of the dollar pairs, I'm not going to be interested in the dollar pairs until Wednesday onwards. Again, what I would like to see is a correction, consolidation, and then a move in the direction of the markets that we're looking at. And we're going to have markets that we're looking at today, which we can play this interest rate decision both ways. And once we have those moves, I will be looking for any opportunity to get involved in the direction of travel in the dollar pairs from Wednesday onwards. So this interest rate decision on Wednesday really is going to kickstart not just the dollar pairs, but you could well see most of the markets drifting sideways into Wednesday. That does happen because of the global reserve status of the dollar. And so don't be surprised if a number of markets drift sideways, not just the dollar, next week into Wednesday. And because we're coming up towards the end of the month here, we are coming into November next week. The results of FOMC on Wednesday are likely going to shape the direction of travel for November for the following month. So if you have to wait a couple of days in order to get involved in the dollar pairs in the markets, it's not a big deal just to wait and see if we get strong moves from FOMC on Wednesday. And again, as I say, this could quite easily provide the direction of travel for the rest of November. If we scroll down further, you can see we also have an interest rate decision out of the UK, and there are not expected to be any changes in the interest rates. However, We are in an environment of high levels of inflation. Don't be surprised if there are some surprise interest rate hikes. Either way, it doesn't really matter because, again, if you are waiting for these events to take place and then getting involved on the follow through, it doesn't really matter which way the markets break on the interest rate decisions. You can actually play them both ways. So we do have this interest rate decision on Thursday out of the UK. Because it's on Thursday, I, just like with the Euro interest rate decisions previously, I do like to trade, and I will be looking to trade pound pairs before Thursday, because you have most of the week where the pound can move before Thursday. You have Monday, Tuesday, Wednesday, half of Thursday, and then basically it's just the end of Thursday and Friday where you have the interest rate decision. So if there's an opportunity to trade the pound pairs early and be out of those markets with a profit before Thursday's interest rate decision, that's going to be something I'm interested in. But as I said previously with the Euro pairs, I just wouldn't take too many pound positions, because if you get stuck in a pound trade and it goes nowhere and you want to cut it for a small loss, or you hold through the interest rate decision on Thursday, you don't want to be in too many pairs taking too much risk if that takes place. So I wouldn't mind looking at any good pound setups before Thursday next week, but probably only just take the best one that I like. And finally, next week, you can see that we have Canadian employment data, which can act as a catalyst again, just like any employment data. But because it's on Friday, I will be looking to trade the CAD pairs before that. And we also have non-farm employment data coming out on Friday. Now, very often you can see non-farm payrolls week, the market just drifts sideways. And you can have very slow markets in non-farm payrolls week until the NFP data is released. However, the interest rate decision out of the US on Wednesday is likely to take priority and precedence over the NFP data coming out on Friday. So I don't think we're going to have to wait all the way into Friday to see moves in the dollar pairs. I think the moves are going to start in the dollar pairs and possibly in other pairs as well from Wednesday onwards once we have FOMC out of the way. So to summarize here, we have a lot of data coming out next week. How I personally like to play this is I won't be interested in the Aussie pairs until this interest rate decision on Tuesday, because on Monday they're unlikely to move and it's pointless being in markets which go nowhere. I will be looking to trade the dollar pairs from Wednesday onwards after the interest rate decision. And in terms of the pound pairs, I will be interested in taking one, maybe maximum 2 pound trades before Thursday, but I won't go much more than that because of the interest rate decision on Thursday. And again, just to finish off, as I said, although we have non-farm payrolls data on Friday, I suspect because of all the other data we have next week, that moves are going to take place before the NFP data on Friday. So I think this is likely to be overshadowed by everything else that's going on throughout the week. So quite a lot of data coming out next week. It's not a week to go crazy on. It's really a week to be a little bit patient and see how the markets start to unfold with a view to the rest of the month of November. So again, important as always to look at the economic calendar because it gives us our pathway and our timings of the markets next week. So moving on to the scorecards for this week. And just quickly, you can see last week one of the key things was the weakness of the Japanese yen. And over the last 2 weeks, I said to you guys that the yen is so weak that we should expect actually counterintuitively almost a little bit of strength to come in as profit taking comes in. And we've been off the yen pairs for a couple of weeks now. And we did see the yen strengthen somewhat, and we're back in that zone now where the yen is once again looking like a decent short opportunity. So the first thing to note is that from this week onwards, the yen pairs look to be back into play after the profit taking has come in and we've had a very short near-term correction. The euro pairs to the downside were some of the best markets last week, especially vis-a-vis the New Zealand dollar and also the Aussie dollar. And even against the US dollar, the Aussie dollar and New Zealand dollar finished the week up. But coming to this week, FOMC week, we've seen a number of the currencies shift. And the first thing to note, as is almost always the case leading into a big FOMC event, is the dollar is completely neutral. It's completely flat. And this is virtually always the case lean into a big event like Wednesday, since the big key interest rate decisions very often kickstart the move for the following quarter. And so what we're seeing here in the scoring system is that traders are essentially waiting beforehand until FOMC before they start to put their money into the markets, which is exactly as we discussed when we went through the economic calendar as a way to approach the FOMC event next Wednesday. The New Zealand dollar is still the strongest currency, followed by the Australian dollar, and you can see there has been no change since last week in those two currencies. So once again, I do like Australian and New Zealand dollar strength plays going into this week. The third strongest currency this week is the Swiss franc. Now, if we look at the actual score, and of course we have maximum minimum of 4 in the scoring system, it's only +1. So it's not super strong. It's only slightly bullish. However, you can see this is +2 from last week. So we're seeing the Swiss franc strengthening. It's not super strong, but it's strengthening. And this strength could continue into next week. We could see the Swiss franc strengthening maybe from 1 to 2 or 3. So Swiss franc strength pairs are something that I'm going to be interested in and we're going to look at when we go through the charts this week. The Canadian dollar has actually slipped somewhat to now a scoring of 1. And this was previously 3. And in fact, we've traded the Canadian dollar to the upside very nicely in previous videos. And then we got so extended, we waited, we saw some profit taking coming in. And now it's kind of drifting back into a neutral territory. So going into this week, I'm not completely bowled over by Canadian dollar setups. We are going to look at some CAD strength plays. However, I would much prefer to look at New Zealand, Aussie and Swiss franc strength plays going into next week. And again, we're going to look at this when we go through the charts. The US dollar, as I said, is completely neutral and this is unlikely to change until Wednesday. So we're going to look at dollar pairs to the upside and the downside going into next week for those potential interest rate decision plays from Wednesday onwards. The euro is still weak at -2, and this was one of the best shorts identified not just last week but also the week before. And in fact, we've been short primarily Euro Aussie, Euro New Zealand for the last 3 weeks, and we've had 3 big down weeks that this scoring system has put us in front of in those markets. So the euro is still weak going into next week, but because it makes up 57% of the dollar index, the euro is likely to be affected next week by FOMC as well. So everything we're discussing here is with FOMC on Wednesday in mind, because it has the ability, as I said, not just to affect the direction of the dollar's next move, but also other currencies as well, especially the euro. And finally, to the short side, we also have the pound, which has slipped from neutral last week to -2. So I do like pound short setups going into this week. It's something I'm going to be looking at before Thursday. And we saw some strengthening of the Japanese yen, as I said, but this is actually a good thing because it was so weak. We should expect some profit taking to come in over the last 2 weeks. It's exactly what we've seen. And now we're getting back into a place where I would be interested to start to look for yen weak setups again. And after leaving those yen pairs that we've been looking at over the last 2 weeks, after leaving them as profit taking comes in, be interested to look for potential opportunities in those directions that we were previously looking at. Because again, just like the Canadian dollar strength plays that we had in previous videos, the scoring system also puts us in front of those big yen moves. So CAD yen to the upside, New Zealand yen to the upside, Aussie yen to the upside. So from next week onwards, I will be interested in looking to get back into those markets in those directions again. So the key takeaways from the scoring this week is that Aussie and New Zealand are still my favorite long plays. Euro and yen are still looking like the best shorts. And also the shifting to the weak side of the pound and to the strong side for the Swiss franc is something I'm going to be paying attention going into next week. And pound franc to the downside is actually something we're going to look at in the video. And it's a market that is interesting to me next week, and we'll discuss this in more detail. So what would that look like? Well, it would look like pound New Zealand to the downside I'd be interested in, pound Aussie to the downside, pound franc, as I said, to the downside. I will also be looking at Euro Aussie, Euro New Zealand to the downside, Euro franc to the downside we're going to look at. The dollar pairs, as I said, we will look at, but they will be interest rate decision plays that I'll be looking to trade next week. And we're also going to be looking once again at those New Zealand, Aussie, yen setups to the upside. So let's now have a look at the individual currencies. And this is what we set up with last week in the DXY. I noted that we had this double top confirmed. And we're looking for a sell-off into the 93.25. We came very, very close within just a couple of points, and then we reverted back higher. Why? The DXY got choppy last week because of this interest rate decision. The market wasn't prepared to find a strong directional bias one way or the other before this Wednesday's FOMC meeting. So if I readjust these levels for this week and I leave on the double top confirmation level here, you can see leading up to FOMC on Wednesday, we have what I've noted in previous videos is that we have this kind of one up, one down leading into the interest rate decision. The market is technically structuring itself in a way that it can move in either direction, because what we have here is we have a near-term double bottom, which is giving us our current technical bullish bias confirmed above this level. And this comes after the double top confirmation over here. So we have a confirmed double top, which is a bearish reversal pattern. And we have, as of last week with this rally higher, a bullish reversal pattern in the form of this double bottom. And the market is sitting right between these two patterns. And it's probably going to continue to sit there until Wednesday. And then one of those patterns will fail and one of them will succeed. Hence why going into next week, we don't actually have to take any positions in the dollar pairs until Wednesday. We can wait for FOMC, and if we get a bullish reaction, we can start to trade the dollar to the upside. If we get a bearish reaction, we can start to trade the dollar to the downside. So in terms of the DXY itself next week, the technicals do not provide too much of an insight as to the direction next week, because the direction is likely to be decided on Wednesday during the FOMC meeting. And although the dollar pairs are going to be some of the key markets that I'm going to be looking at next week, we're going to look in today's video at the dollar markets, which are structured in opposite directions. So regardless of which way the dollar breaks, whether we continue this rally higher or we start to reverse and break the 93.49, we will have setups where we can attempt to play that move both ways. So the key next week really in the dollar, in my opinion, is to be reactive as opposed to trying to be predictive. Next is the euro. Now, just like we looked at in the dollar, I've left on these levels initially here from last week, and you can see we're looking for a move into the 1.16990, and that was pretty much the high of the week. We took out this target to the pip almost and then reversed. So coming into this week, looking at the structure, we do have this near-term double top, and technically speaking, I am bearish on the euro, but just like we looked at in the DXY, it is more or less meaningless when FOMC on Wednesday has the ability to reverse the direction of both the euro and the dollar, as well as the other currencies, in fact. So again, this week, the technicals in the euro are not too helpful on a forwards-looking basis, and the euro pairs are best traded as well, like interest rate decision trades from Wednesday onwards, because you're going to get moves in the euro just as much as you're going to get moves in the dollar. And when we look at the euro pairs like Euro New Zealand, Euro Aussie, I'll discuss the directions those markets will move, whether you have a bullish or negative reaction from the DXY on Wednesday. Next is the pound, and we're on the daily chart here. You can see the pound is still structured to the downside, and I noted in previous videos that we had this major double top confirmation, and again the pound is sitting in an area where it could break either way, because we're sitting above this. In fact, we're sitting right at the confirmation level of this double top, so we could start to break higher if we see the dollar selling off next week, or if we get a strengthening of the dollar, we will see the pound continue down. As it currently stands, the pound is actually bearish technically, and this adds some weight to some pound weak setups next week, and it's one of the reasons I'm interested in pound shorts. But again, pound pairs will also be affected by the interest rate decision on Wednesday. Next is the Swiss franc. I discussed in previous videos this inverse head and shoulders after this head and shoulders, this kind of one up, one down. So the Swiss franc is sitting right in there. It could go either way, but I am technically bullish on this after the most recent break was the inverse head and shoulders to the upside. And we are seeing some strength coming into the franc. So also confirming what we looked at in the scoring system. But again, Swiss franc will be affected by FOMC on Wednesday. Next is the Japanese yen. In previous videos, we were looking for declines, and yen shorts was a big theme we were looking at in previous videos. It paid off very nicely, and we went neutral on the Japanese yen, looking for some profit taking to come in a couple of weeks ago. We've had this. Yes, the yen could continue a little bit higher. Perhaps it comes back a little bit more, but I am now interested to start to look for those bearish setups in the yen once again. Goes without saying, as all the currencies will be affected by FOMC on Wednesday, but yen shorts are something I'm interested in once again now. Canadian dollar. In previous videos, I was bullish on the Canadian dollar. We had this inverse head and shoulders breakout. We had a really nice rally, paid very nicely in the CAD pairs, and we got right to the inverse head and shoulders target of this break here. And as we tagged this, we were also +4 on the scoring system for the CAD. So those two things combined led me to the opinion that we should be patient, look for profit taking in the CAD pairs. We did get that. And we are kind of neutral now in the Canadian dollar. You can see this is not bearish. We're actually consolidating in an overall uptrend. But when we look at the scoring system, a rating of +1 is kind of neutral. So I would like to see if this is going to strengthen. I would like to see it strengthen once again first, start to break higher, and then I'd be interested in getting back into CAD pairs. So CAD pairs quite far down on my list this week, although we will be looking at them. Australian dollar. The Australian dollar is grinding to the upside, And I did note in previous videos, this is a major breakout in the Australian dollar. Now, when you have a breakout like this with an inverse head and shoulders, the question, as always, is this an A, B, and a C, and you're going to start to continue down? Or is this the start of a third wave and a new trend to the upside? And very often, when you have breaks like this, they coincide with what? Big news events like FOMC. So FOMC on Wednesday is likely to decide whether this is a 1, a 2, and a third wave to the upside in the Australian dollar. If that's the case, we're going to see the dollar selling off from Wednesday onwards. Or if we start to see a strengthening of the DXY, that will lead to the Aussie breaking down, and this could be a false breakout for the next leg down in the Australian dollar. Again, this is likely to be decided from Wednesday onwards. And finally, if we look at the New Zealand dollar, we have exactly the same setup. Is this the start of a third wave to the upside? I mean, look where we're sitting right at the breakout point. Could go either way. Or is it going to fail as a breakout and turn into an A, B, and a C for the next leg down? Well, if that was going to happen, we would need to see FOMC providing a strong directional bias in the DXY on Wednesday. So again, should go without saying at this point that shouldn't be taking too much risk before Wednesday, because that is likely going to decide the next big move, not only in the DXY, but all of the other markets as well, for not just November, but perhaps the next few months as well. So let's go through the markets and start with crude oil. Crude oil is market structured to the upside. I am still bullish on crude oil, but with FOMC on Wednesday, I personally would just like to be a bit patient. We've had a really nice run, and I wouldn't be surprised to see crude oil continue to correct. So personally speaking, I'd prefer to wait until after Wednesday to assess crude oil, see if there's any opportunities in crude oil. But any continued correction will be simply viewed as an opportunity to look for bullish reversals up towards the next key resistance, the upside and the target set at the 88.75. Now, when we go through the markets, we're not going to be looking at the Canadian dollar pairs in relation to crude oil, because FOMC on Wednesday is likely to dictate the next moves in the Canadian dollar rather than crude oil, as would normally be the case without FOMC. So let's start by looking at the dollar pairs, and you're going to see as we go through the dollar pairs here, I have markets which are structured to the upside, markets which are structured to the downside. And this is so regardless of whichever way the interest rate decision goes next week, we can attempt to play the follow through after the interest rate decision. So we're going to start with pound dollar to the downside, which of course would be a bullish reaction from the DXY. And we're starting with dollar strength plays, as my bias is for a more hawkish Fed on Wednesday, and therefore to see the dollar start to rise. And so I expect we're most likely going to see dollar strength coming into the markets. But as a plan B, if that doesn't happen and we see the reverse happening, we see dollar weakness, we can also go to some dollar pairs to the downside, namely New Zealand dollar up, Aussie dollar up, US dollar CAD. So starting with pound dollar, what I'd like to see is I expect this to correct. Maybe we come down a little bit, but I expect this to correct into Wednesday. And then if we start to break lower on Wednesday as we get dollar strengthening, I'm going to be looking at initiating shorts down towards the next key support to the downside and the target set at the 1.3610. Next is euro dollar. These were the levels set up last week in euro dollar, and I've left this on because this is very interesting to note, because when we look at the currencies here, we're looking at them on a relative basis. And I often get asked, sometimes like last week, if we're looking at euro dollar to the upside and euro Aussie to the downside, how can you be bullish on euro dollar and bearish on euro Aussie? It doesn't make sense, because you're essentially going opposite directions in the euro. However, you can see we had a rally to the upside at the same time we took out targets to the downside. So it's important to remember when you're looking at currencies, it's all relative. So switching over to the levels for this week, you can see after this major double top reversal at the end of last week, I do go into this week with a bearish disposition on the euro technically. And so going into next week, if we start to correct and we start to form this bear flag, and then we break out to the downside on a strong or hawkish FOMC, I'm going to be looking for any pullbacks in this area, and I'm going to be looking at initiating shorts down towards the next key area of support to the downside and the target set at the 1.1495. So pound and euro, the two weakest currencies going into next week, and therefore, in my opinion, the best dollar strength plays from Wednesday onwards in the FOMC. If on the other hand we get a big sell-off in the US dollar for whatever reason, the first market I'll pivot to is New Zealand dollar, since the New Zealand dollar is the strongest currency right now. So what I'll be looking for next week is if we start to correct lower and then on Wednesday on FOMC we get a rally to the upside like this, I'm going to be looking any pullback at initiating longs up towards the next key resistance, the upside the target set at 0.7264. The next dollar week play I like from Wednesday onwards is Aussie Dollar. We are very close to the target set from previous weeks at 0.7562, so perhaps we come and take out this target first before Wednesday and then start to correct as profit taking comes in, or we just simply start to correct in this market before Wednesday. If that takes place and then on Wednesday we get a rally to the upside in this market and we start to correct, that's going to be the opportunity to start to look for bullish setups. Let me just draw this again to make this a little bit clearer. So we take out the target set first and then we pull back, or we just start to correct from this area. I'm going to be looking at a rally to the upside on Wednesday, at looking to initiate bullish setups into the previous target at 0.7562 if we haven't already taken it out, and then after this onto the 0.76870, and bearing in mind that this would be the continuation of a third wave in Aussie dollar to the upside, because this was the major breakout point we looked at in previous videos. And finally, to the downside, I would also be looking at US dollar CAD. We are correcting already in US dollar CAD. You can see this is pretty neutral heading into FOMC. Any continued correction into Wednesday, followed by a sell-off in the US dollar, is going to be viewed as the opportunity to start to look for bearish setups down to the next key support to the downside target set at the 1.21790. So all eyes on Wednesday for the next moves in the dollar pairs, and that is how I'll be looking to play the US dollar pairs next week. Moving on to the yen pairs, New Zealand yen is the top of my list, and I put this Fibonacci on for you previously just to show you that it looks like we're in a fourth wave if we come back. And you can see we had a 1, a deep 2, a 3, and now it looks like we're in a shallow 4, or shallow in form. Could be a triangle, could be a very shallow ABC, etc. But I am now interested once again in looking for further moves to the upside in the yen pairs. Any continued pullback towards the 382, which is over here, is going to be viewed as an opportunity to start to look for bullish reversals in this market, and perhaps we get it on Wednesday. Perhaps the market goes nowhere and then it moves from Wednesday onwards. So you can trade these pairs almost like interest rate decision pairs as well, because they're likely to be affected by FOMC. Any break higher is going to be viewed as the opportunity to look for bullish setups into the next key of resistance, the upside the target set at the 82.68. Next is Aussie Yen. Aussie Yen also looks to be in a third wave, or I should say in a fourth wave after this third wave rally to the upside. Here's the inverse head and shoulders, here's the breakout, and this is what we're looking at, but perhaps ahead of time in Aussie dollar, New Zealand dollar. We have this inverse head and shoulders play, and we are sitting right here at the Aussie US dollar and New Zealand US dollar pairs to the upside. So any continued pullback in this market is going to be viewed, maybe we come down from A, B and a C, as an opportunity to start to look for bullish setups up towards the next key resistance, the upside the target set at the 87.190. CAD Yen, I do prefer New Zealand and Aussie Yen for reasons discussed, but in CAD Yen we pulled back and tested this previous key area of potential support, and we tested this almost to the point I left this on in previous videos. Now we've tested this, maybe we come down and retest it once again, but any continued pullback is viewed now as an opportunity to once again look for bullish reversals. I'm going to be looking up towards the next key resistance, the upside the target set at the 93.21, and if we can break through here, going to be looking up towards target 2 at the 94.45. Again, may only start to break out from Wednesday onwards. And the last yen pair we're going to look at is US dollar yen. US dollar yen took out the target previously set at the 114.490. And going into this week, you can see we're consolidating. Any continued consolidation will be viewed as an opportunity to look for bullish reversals up towards the next key resistance, the upside and the target set at the 115.50. Moving on to the pound and euro pairs, starting with pound New Zealand. Pound New Zealand is trending to the downside, and I do like this as a short going into next week. The one thing to pay attention to next week is that pound New Zealand, the same as pound Aussie, especially euro New Zealand, euro Aussie, these are going to be affected by FOMC on Wednesday. And how these markets are affected is based around the fact that the Australian dollar and the New Zealand dollar are more exposed to volatility in the DXY. What that means is if the US dollar strengthens, you tend to see the New Zealand dollar and the Aussie dollar weakening at a faster rate than the other currencies like the G10 currencies. And if the US dollar sells off, you tend to see the New Zealand dollar and the Australian dollar appreciating at a faster rate. So generally speaking, as a rule of thumb, you tend to see with a strong dollar, pound New Zealand to the upside, pound Aussie to the upside, euro New Zealand to the upside, euro Aussie to the upside. And with a weaker dollar or a sell-off in the dollar, as a rule of thumb, you tend to see pound New Zealand to the downside, pound Aussie to the downside, euro New Zealand to the downside, euro Aussie to the downside. So if you don't want to take any risk before FOMC on Wednesday, that's fine. But if you are looking to get involved in one or two pairs before Wednesday, which are non-dollar pairs like pound New Zealand, euro New Zealand, the opportunity I'd be looking at in this market, or of course you could just trade it as an interest rate decision on Wednesday if it doesn't move, any pullback in this market will be viewed as an opportunity to look for bearish reversals down to the next key support to the downside and the target set at the 18942. The next market to the downside I like is pound Aussie. Pound Aussie broke out of this near-term consolidation here, and we're breaking with momentum. Now, when we tend to break patterns with momentum like this, you start to see the market correcting, and then you get more follow through, in this case to the downside or the upside. So I do like this. I am looking for a bear flag pattern start to form next week. Any pullback in this market will be viewed as an opportunity to look for bearish reversals down to next key supports the downside and the target set at the 1.8062. Pound Franc. Now pound Franc is a very interesting one because we had an inverse head and shoulders to the upside in pound Franc, and just look at how choppy this market has been. We've not looked at this market in the forecast for a long time, or we've rarely looked at it, and it's because the market has been extremely choppy. Both the pound and the Swiss franc have been fairly evenly matched. Going into this week, for one of the first weeks in a long time, the pound is significantly or markedly weaker than the Swiss franc. And we could, as a result, start to see this very, very choppy consolidation pattern all the way back from April and May actually start to break out. And it would be suggestive as a failure to the downside with this inverse head and shoulders failing. So if we break the 1.2470 in this market, we could actually see some strong momentum coming in as all of these traders who have been trading this to the upside, looking to buy into this inverse head and shoulders, they're going to have stop losses down in this area. Some will be more aggressive down below the right shoulder, so you could see some momentum here, and others will be more conservative in their stop loss approach, will be down below this low here. But either way, if we break these levels, we're likely to see some momentum coming in. So pound franc is a very interesting market, and because it doesn't have an Aussie or a New Zealand in it, it's going to be less affected by FOMC on Wednesday. So if you're looking for one of those pre-FOMC trades, pound franc could actually be quite a good one. Next week is not going to be a week to have tight stop losses anyway, but pound Swiss franc is likely to be less affected than pound Aussie, pound New Zealand. It will be less volatile during FOMC. So I do like pound franc to the downside, and this would probably be my favorite one out of all the pound pairs as a pre-FOMC trade. What I would like to see then next week is any pullback in this market will be viewed as an opportunity to look for bearish setups, and we're breaking below here with momentum. This is potentially a very nice setup, and in fact one of my favorite ones between Monday and Wednesday going into next week. Any pullback, I'm going to be looking at initiating shorts down towards the next key supports the downside, the target set, the 1.2470. And the final pound pair, pound CAD. Pound CAD is a very sideways market, and what I'd like to see is, just eyeing this off, you can see this is not as nice a setup as the other markets here. There is no real momentum. It's very, very choppy. What I would like to see then, if I was going to trade this, is I would like to see a continued correction probably into Wednesday. Any reversal from FOMC to the downside like this, that would be the opportunity to start to look for short positions down to the next key of support at 1.6862. As I said earlier, the CAD pairs, however, are the least favorite pairs of all the ones that we're looking at for me next week. And wrapping up the currencies with Euro New Zealand and the Euro pairs. Euro New Zealand is structured to the downside. We took out the target set last week at the 1.61390, and this was highlighted as one of the best pairs to trade last week, and we had a really nice down week again. Taking out the target almost to the point here, in fact. Coming into this week, I am looking for further declines. Any correction will be viewed as an opportunity to start to look for bearish reversals. And don't forget what we could have. We could have FOMC and Euro New Zealand snaps back and then starts to fade in this area and breaks down, and then you can start to look to go short. Or maybe it starts to correct before FOMC and then starts to break down, in which case it can be traded like an interest rate decision. Either way, I am only interested in short positions in this market next week, looking down towards the next key of support at the 1.6029. EurAussie was another market highlighted to the downside as one of the best markets to look for last week, and we had a really nice move into the target set, another big down week in EurAussie. Any pullback in this market will be viewed as an opportunity to start to look for bearish reversals, down towards the next key of support to the downside in the target set at the 1.5271. Euro Franc, very similar to what I discussed with Pound Franc. If you're looking to get involved in an opportunity before FOMC or holding a position through FOMC, Euro Franc to the downside and Pound Franc to the downside would be my two main currencies to look to do that. Why? Because they are going to be less affected by FOMC than the pairs with the Australian dollar or the New Zealand dollar in it. Look at the momentum we have here to the downside in Euro Franc. This is looking like a very, very nice market going into next week. So Euro Franc and Pound Franc with FOMC on Wednesday are two of my favorite pairs going into next week. Any pullback in this market is going to be viewed as an opportunity to trade this as a bear flag. And I'm going to be looking for further declines down towards the next key of support to the downside of the target set at the 1.0533. And last, but in this case, probably also least, EurOcad. Very, very sideways. And in fact, we're approaching the targets down here. So very similar to PoundCAD, what I would want to see here if I am going to trade this is I'd want to see this continue to pull back like this. And then any break lower would be viewed as the opportunity to start to look for short positions down to the next key of support to the downside, the 1.4266. In all honesty, even though we've looked at them, I will probably not trade the Canadian dollar pairs next week personally. Moving on to stocks and looking at the SPX. Ever since we broke out and we bottomed down in this area, I've been looking for moves to the upside, and we took out the target last week set at the 458146. That capped off a really nice week in SPX and in stocks. Going into this week, it does look like we're going to take out the target of the 462213, perhaps heading into Wednesday. However, very similar to the process we look at with the currencies, and we get a currency which is +4 or -4, and in that scenario you're looking at it almost being overextended and you expect profit taking to come in. The process and the analysis that I go through personally on stocks is telling me the same thing. It doesn't mean that stocks are bearish, but it's telling me that it's most likely a profit taking situation and we could have a very short near-term top in stocks. So I'm not talking about a market crash, I'm just talking about a correction similar to the profit taking we saw previously in the Canadian and the yen pairs. So just bear that in mind going into next week. I think it could be a good time to book some profits on SPX or on stocks if you are involved in these to the upside. If we do take out the 4622, especially bear in mind as we have FOMC on Wednesday and the Fed could get hawkish. But if we take out the 462213, I'm going to look for a pullback, going to be looking for that correction. And once we have a pullback and a correction, I'm going to be looking at initiating longs once we start to break out up towards the next key of resistance, the upside of the target set at the 467364. Next is the Nasdaq. I did highlight previously this inverse head and shoulders breakout here, and we have now taken out the target set in the Nasdaq last week. Going into this week, I am still bullish on stocks, but as I said, across all the stock markets, I do think there's a good chance we could see a near-term correction, a near-term top, and I am viewing stocks as a profit-taking opportunity, as opposed to being bearish on them. So what I'd like to see here is if we could start to pull back and we could get a correction in the stock market, any reversal higher, any break higher would be viewed as an opportunity to start to look for bullish opportunities once again, up towards the next key of resistance, the upside of the target set, at the 15998.92. Next is the Dow Jones. The Dow Jones is very close to completing the target previously set. I would not be surprised to see it take out this target and then correct a little bit. Again, I think we could see profit taking coming into stocks near term. Any pullback, once we've taken out this target, would be viewed simply as an opportunity to look for bullish reversals. We're going to be looking up towards the second key of resistance, the upside of the target set, at a 36428.44. So don't be surprised to see Dow Jones taking out its target and starting to correct next week. Next is the Russell. Now, as the other stock indices have moved higher, the Russell has been moving higher, but it's kind of only grinded higher. We are very close to the target here as well. So again, I am looking for this target to be completed. Once we take out this target, any pullback, any near-term profit taking correction in this market will be viewed as an opportunity to once again look for bullish reversals up towards the next key resistance, the upside and target set, and the 2370.51. And of course, all of these stock indices are likely to be affected by FOMC on Wednesday. And last but not least, we have the Nifty. Now, I have been bullish on the Nifty for quite a while. Really down in this area, I highlighted this inverse head and shoulders in the Nifty, and this kick-started this major trend to the upside, and we were bullish ever since we broke out of this. And this has been a fantastic performing market, and for the first time in a long time, I have turned bearish on the Nifty. Does not mean that I think it's a great idea to go out and short the Nifty, but what it does mean is it could be a good idea to start to get some protection into any portfolio in case you get continued downside in the Nifty. Or if you like to be long only, as I always say, you can just simply wait for this market to continue to correct. And once we start to reverse higher, just as we did down here, for example, market corrects, and then we start to reverse higher, you can start to look to be bullish once again. But I would at the very least be patient on long positions in the Nifty. The next key of support to the downside is the 17437.35. And we're going to finish off here with gold, silver and Bitcoin. Now, what's really interesting going into this week is that gold and silver are structured in opposite directions. However, they're both likely to move in the same direction next week, whichever direction that is. So what this does is this sets us up with a natural opportunity to position after FOMC in one or the other. Very similar to what we looked at with EurDollar to the downside, and then on the other hand, Aussie Dollar to the upside. So gold is structured to the downside. So going into next week, what I would like to see is any continued pullback. I'm only interested in short positions. If we start to get hawkish FOMC and we see gold breaking down, we get that initial move to the downside, I'm going to be looking at initiating shorts down towards the next key of support to the downside and target set at 1751.29. Next is silver. Now, silver as a market is structured to the upside still, and we're forming this kind of bull flag. So as I said, this sets us up with a fairly nice scenario where we can wait for FOMC on Wednesday, and depending on which way the dollar breaks and we start to see whether gold breaks to the downside as we just looked at, or if silver breaks to the upside like this and then starts to pull back on FOMC, I will be looking at initiating longs up towards the next key of resistance to the upside at the 25.31. So again, because of FOMC on Wednesday, I would rather be reactive than predictive in gold and silver next week. And just remember, when you have a week like next week with so many different news events, even if you only take one trade or you don't trade at all, there's nothing wrong with that, because there will be more weeks after that where the picture is more clear cut and you don't have as much event risk. So you don't have to trade lots and lots of pairs every single week. Patience, picking the best pairs and being reactive next week, in my opinion, is the best trading plan. And finally, we have Bitcoin. Bitcoin is a market that we've been looking for a correction and further advances. We did pull back and we took out the minor key area of resistance and support here at the 57.867, which I had on previously, and we bounced almost to the pip from this level. So very simply put, going into next week, I am now looking for further advances in Bitcoin. Any break higher will be viewed as an opportunity to start to look for bullish setups into the next key area of resistance and target set at the 67516. So that is it from me for this week, guys. Tons going on next week with FOMC, 3 interest rate decisions in fact, and other economic events. Next week could end up being a very, very tough week if you get involved in too many pairs or you get involved taking too much risk. I personally like the plan of Euro Franc, Pound Franc opportunities primarily before Wednesday, and then from Wednesday onwards being reactive in those dollar pairs either to the upside or the downside, as opposed to being predictive and trying to guess what the outcome of FOMC will be. So as always, I hope you enjoyed this video. If you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care and don't forget to trade safely.